Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
I have a good show for you today. A lot going on, as there always is, it seems, on Wall Street. Markets are pulling back a little bit after a massive opening market surge. Dow is up over 1,000 points as of now. It was a little bit higher an hour ago. Bitcoin is jumping as Iran demands crypto toll for ships passing Hormuz. Oil prices crater down 16% after Trump announced a 2-week ceasefire that is largely being held, although Iranian missiles are still hitting some of the UAE and other targets as they're upset that Israel is going after Lebanon still. The dollar is losing its war premium, and emerging markets are loving it. Semiconductor industry revenue to hit $1.3 trillion in the year 2026. Delta stock is rising after first quarter earnings beat. Flights are getting more expensive. I just put my spouse and child on a flight to LA, and it was $1,200 round trip. It usually is around $750, $800 round trip. So that's a big shock. Bitcoin's jumping to a 3-week high on the U.S.-Iran ceasefire, up 4.4% today. Let's get into some of this. The S&P 500 is up 2.1%, sitting at 6757. The Dow Jones Industrial Average up 2.3%, sitting at 47,669. The Nasdaq's up 2.5%, sitting at 22,574, and the Russell 2000's up 2.8%, sitting at 2616. The VIX is at 21. We know stressful levels of 27 or higher. 27 through 40 is usually the band. Anything higher than 40 is panic. Bitcoin sits at 71,141. And the CBOE interest rate 10-year Treasury note is at 4.27%. Talks of potential interest rate cuts now have started to emerge on this news out of Iran this morning, or out of Iran yesterday afternoon, when it didn't happen, where Trump backed off. As Jimmy Kimmel said, it's the ultimate Taco Tuesday. Let's take a look. The Brent crude's up 49% for the year. That'll be a little bit lower now. Silver's up 8%, gold up 12%, Bitcoin down 19%. Morgan Stanley All Country Index, all world, down 1.6%. That should create some outperformance, to be honest with you, because of what the dollar's doing. Russell 2000's up 1.4%. The NASDAQ down 5.2, the S&P 500 down 3.5, the Dow Jones Industrial Average down 3.7. So at the open this morning, the Dow Jones Industrial Average and the S&P 500 looked very much like they've wiped out the losses for the year. U.S. and Iran agreed to a 2-week ceasefire to pause a 5-week war that had squeezed global energy supplies and rattled the geopolitical landscape. Trump's Truth Social post called a double-sided ceasefire condition on Iran's complete, immediate, and safe opening of the Strait of Hormuz. Overnight, oil prices dropped 20%. Stock futures surged. Tehran has initially rejected a temporary ceasefire last night, and then they countered with a 10-point plan demanding permanent peace, sanctions relief, and a $2 million fee per ship transiting the strait. Trump called that plan not good enough on Sunday. But by Tuesday night, he said it was a workable basis on which to negotiate. So if Tehran and Iran ultimately get to set up a toll booth in the Strait of Hormuz, there's no doubt about it. The world lost, and Trump looks silly. Which tells me in 2 weeks we could be right back at it. Also, a lot of the Middle East allies or countries that don't like Iran, like the UAE, Qatar, Kuwait, they don't want Iran to be able to do this again. So they're feeling a little left at this point in time. Earlier this week, the United States struck on more than 50 military targets on Karg Island, the hub that handles roughly 90% of Iran's crude exports. They're running out of fresh water. So there's problems. They had to get a little bit of a reprieve. Some of the military experts who've been working their way into Bloomberg and CNBC this morning talked about how this isn't over. Mission not accomplished. And they expect to see boots on the ground in 2 weeks. But yet, this morning's market is yet another reminder that trying to trade in and out of stocks is tough. Over the long run, missing the market's best days damages your returns. Some people believe that the market put in a bottom last Monday. Anthropic's probably the biggest story of the day. They have a new AI model that's going to be... Now, how did I say it's just... Let me stop for a second. The biggest story of the day is the markets and oil. But the second biggest story, or what would have been the biggest story, is Anthropic. They have a new AI model that'll initially be rolled out to a select group of companies as part of a cybersecurity initiative called Project Glasswing. CrowdStrike and Palo Alto networks are benefiting on this. What we heard from Anthropic is this new model was so powerful, and they're calling it Mythos. It's a version of its new AI model. They're rolling out to a select group of mostly tech companies and JP Morgan so they can go to work on protecting against cyber attacks. So if you thought AI was going to put CrowdStrike and Palo Alto networks out of business, you just kind of learned that Anthropic is going to be working with them to make sure that the world doesn't end and that the biggest cyber terrorism threats don't come to life. I got no sleep last night. Dog was sick and the markets were volatile. Cybersecurity stocks had faced pressure in May, in March. See what I'm doing? I'll try to clean it up. When a leaked Anthropic document reviewed by Fortune warned that its new model would be so powerful that malicious actors could launch potentially indefensible cyber attacks. That same report also said that Anthropic would be releasing Mythos early to cybersecurity firms to help them bolster their defenses, which is what this whole Project Glasswing is all about. Yesterday, a Claude developer, Anthropic, said that they're announcing an expansion of its partnership with Google and Broadcom for AI compute and saying that its run rate revenue has surpassed $30 billion, up from $9 billion at the end of 2025. Some of that jump could be juiced by Meta engineers whose AI usage may be serving as another example of Goodhart's Law. That being said, there's clearly some breadth and not just depth. A lot going on with Anthropic. Their revenue run rate just topped at $30 billion. That's ahead of OpenAI. Again, sometimes it depends on how you count. And I know that's a weird thing because numbers aren't malleable. But Anthropic said earlier this week that its annual revenue rate had topped $30 billion, more than tripling from $9 billion reported at the end of 2025. Claude, when Anthropic released Claude, it just got rave reviews. And it can do amazing things. I instantly told my spouse, please kill your subscription to OpenAI. So OpenAI on paper has disclosed roughly $24 billion in annual revenue run rate. So Anthropic's at $30 billion. A remarkable leapfrogging. 6 months ago, OpenAI was the apple that everyone wanted to eat on Wall Street. Anthropic's doing a really nice job with their models and with partnerships. They have over 1,000 enterprise customers that are now spending over $1 million annually. More than double the 500 customers in February. Anthropic could pay roughly $1.9 billion to the cloud providers this year and as much as $6.4 billion in 2027. Both AI startups, ChatGPT, via OpenAI, and Anthropic via Claude via Anthropic. Boy, I'm getting a turnaround today. They burned through a staggering $218 billion from 2026 through 2029, about 23 times what Tesla burned during its most cash-intensive years. Boy, I feel like Tesla's getting left behind hard. China's beating them in the EV world, and Grok, their AI, doesn't seem to have any sort of depth to it. One analyst today downgraded Broadcom to hold from buy, saying the custom chip maker is confronting the limits of the industry. That doesn't really make a lot of sense because earlier in the week they made 2 key wins with Google and Anthropic. I recently bought some Broadcom on the dip. Johnson & Johnson landed a buy call at TD Cowen. Boring company, but 7% annual sales growth rate and a nice dividend is why you own a company like this. Telsey Advisory started Dutch Brothers with buy. Telsey, I love Dana Telsey. There's something about the way she presents. I'm like, I don't want to say like machi. I don't want to go like, I don't want to get weirdly sexual, but I just wish she was my friend. She doesn't even know me. But she started coverage, her company, Telsey Advisory, started coverage of Dutch Brothers with buy. It's a fast-growing regional to national expansion story. It's kind of a poor man's Starbucks, if you will, but they really figured out a way to differentiate themselves. Most of their drinks are protein-oriented. In a world with GLP-1s and with protein getting so expensive, getting it in your coffee and your Java and your Joe makes sense. Another regional to national winner is Casey's General Stores. That stock is joining the S&P 500. Both of those are really interesting names on dips. EBS took its price target on Micron to 535 from 510. Said it's time to get positive on memory again after the red hot stocks had cooled. This is actually a call that takes away from the rest of the tech industry because sky-high memory prices depress gross margins for everyone else in tech. OpenAI has urged the California and Delaware attorneys generals to investigate Elon Musk for improper and anti-competitive behavior, as the trial between the two sides is set to begin later this month. Delta raised their bag fees by $10, becoming the third major airline to hike prices as the industry deals with a jet fuel shortage stemming from the Iran war. Sony Pictures is laying off hundreds of employees as part of a strategic shift. Netflix's price hikes were ruled illegal in Italy. Netflix said they'll appeal, but because they didn't give a reason for the price hike, the Italian court said, you owe everyone a lot of money back. I know you're saying, is that your best Italian? Yes. New York Fed survey shows inflation expectations are at 3.4%. That's a little high. Kevin Warsh's confirmation hearing is set for mid-April. Once he's in at the Fed, we're going to start hearing more about rate cuts, and that should be gasoline for the stock market. Now, one of the areas that was a big winner today, right out of the gate, airlines and cruise ships. Delta up 7%, United up 11%, American up 8%, Southwest up 9%, JetBlue up 10%, cruise lines like Carnival up 3%, Norwegian Cruise Lines up 10%. You get the idea, right? Royal Caribbean up 9.66%. The airline sector was quick to capitalize on the Iran ceasefire, and this is where I hate business at times. They're often the first casualty of a geopolitical volatility. Oil prices went from $65 a barrel to $125. Fuel costs are typically 30 to 40% of cost for an airline. Airlines were smart, though. They not instantly, but within 10 days, they added international fuel surcharges, baking them in during the mid-March. Base fares were raised across the board for higher domestic fares in the U.S. Bag fee increases by Delta, United, and JetBlue. I don't think you're going to see much of that go backwards. Maybe the base fares will drift lower over the next 6 months if this ceasefire holds. But those stocks were big winners today and are big winners. I would trade them. I would not own them. And I would be very careful with the trade because the ceasefire, it could be over in 10 minutes. This was a president who 24 hours ago was talking about ending the Iranian civilization. But back to Delta real quick. Their strong report and upbeat second quarter revenue outlook set a very high bar for the airline industry as earnings season begins, reinforcing its position as a best-in-class operator with a superior demand, visibility, and pricing power. The combination of resilient leisure and corporate demand, expanding high-margin revenue streams, and disciplined capacity management is driving outsized unit revenue growth versus peers. Cost pressures, particularly fuel, remain a key variable. The recent pullback in oil prices provides a meaningful tailwind that could support upside to earnings expectations. Delta's commentary around summer demand being stable alleviates investor concerns about the potential demand slowdown, which had been an overhang on the group. A few years ago, Delta bought a refinery from Phillips 66, so they refined their own jet fuel. At the time, I never understood why. It didn't make any sense. And now it makes total sense. The data center trade is being revived today on the stock market. Memory stocks like Micron and Western Digital up 6%, Seagate up 4%, SanDisk up 7%. The companies that actually make the equipment, semiconductor equipment makers, ASML up 6.6%, Applied Materials up 7.6%, Lam Research up 8%, KLA Corp up 5.9%. The fiber optic companies who've been hot recently, Lumentum up 4%, Coherent up 4.4%, Corning up 5%, Applied Optoelectronics up 2%. The companies who are building the data warehouses, the AI data center warehouses, Nasdaq up 2.2%, Vertiv up 4.6%, Quanta up 2.2%, Comfort Systems up 6.1%. I still have a big show for you, including Patrick O'Hare. He's coming up in the next segment with market commentary about what's happening today. On top of that, I've got another segment. We're a little bit more than a week away. Pints and Portfolio, Saturday, April 18th, 11:30 to 1:30 in Sunnyvale, California. This recent market action, got to put your butt in a seat next to me and have a beer or two. All buy. It's for investors who are 50 plus, heading towards retirement. Want to learn more about me personally. Want to have things looked at from a financial planning perspective. What are you doing right? What are you doing wrong? What could you do better? Tax considerations, tax efficiencies. It's absolutely free. Zero pressure. Super informal. You can sign up for the event at robblackshow.com. It's robblackshow.com. Again, that's Sunnyvale, California, April 18th, 11:30 to 1:30 in Sunnyvale, California. Sign up at robblackshow.com.
Join Rob Black in Sunnyvale Saturday, April 18th for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by from 11:30 to 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, April 18th in Sunnyvale. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this Sunnyvale event and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
Joining me now, Patrick O'Hare from briefing.com, a reliable source of domestic and international news that you can use. A lot of business, a lot of economy, a lot of stock ideas and dividends and value stocks and growth stocks. I never get tired of the site, even though the site hasn't changed all that much in my memory through 20 plus years. Patrick O'Hare, what do you make of today's stock market with yesterday's news?
Good morning, Rob. I think what we're seeing today is a clear relief rally that the worst case scenario did not unfold last night. So you've got a lot of short covering activity going on in the equity market, and it's one of those so-called risk-on rallies. The thing about it, of course, is that it's only a 2-week ceasefire, so the market still has to operate in this zone of uncertainty as to what happens at the end of 2 weeks and what even could happen in the interim, too. Response is likely that isn't entirely surprising. I would note we've been down this road before with the walking it right up to the last minute and then rolling things back. We saw that several weeks ago with a similar action as it related to a presidential threat to get more aggressive in the attack on Iran, and that didn't happen. Then ultimately we saw things roll over again in the wake of that. Still a lot of loose ends here, but clearly the market response suggests that it's definitely relieved that the whole civilization of Iran did not end last night.
One of the late night comedians called it the ultimate Taco Tuesday, which Trump always chickens out. And Taco Tuesday was a staple in my household growing up. So anyway, I'm taking a look at briefing.com right now, and the news is really fast and furious. President Trump in an interview says that the Persian talks with Iran will happen very soon, but security is a big issue. Iran says it will withdraw from the ceasefire deal if Israel attacks on Lebanon continue. Lebanon is the home of Iranian proxy Hezbollah. So this is very, very fluid, and Briefing does a great job of covering this to the point that it's a little upsetting at times. Watching the news last night, creep in on Briefing. I was doing my work and then watching a little update, doing my work, watching a little update. How do you feel about how fluid the situation is? And like you said, it's only 2 weeks. Should we look at this as a relief rally, as a trading opportunity? Or Goldman Sachs says it's a once-in-a-lifetime opportunity to get in some of these tech stocks at below S&P 500 mark. Just give me your vibe on it, on everything I just threw at you. Sorry.
Sure, no problem. It is definitely a fluid situation. I think just given the circumstances, the so-called fog of war, and anything can come at you just out of the blue. We know that President Trump is very resourceful in terms of using social media to get his views across. And the market has to be attentive to what could come at any time. I think that, like it's been throughout this whole conflict, really, I think we're going to see oil prices and treasury yields ultimately tell you what the real situation is in terms of the market's belief as to whether this has life beyond a short-term trading rally or maybe something that can be longer lasting. I do think, in terms of answering your question, is that it's a market environment where you should be favoring quality. Right. And when you see good quality companies get thrown out with the bathwater too, there's this opportunity to start legging into those names. Clearly, the Iran situation is front and center, but what's been truly remarkable through this, though, is that we haven't seen earnings estimates come down at all. In fact, they've continued to rise throughout this situation, and you have to wonder if those estimates are, in fact, achievable. And the market, again, falls back on the understanding that time and time again, companies have come through and continue to post better than expected results. And I think it's now abiding by that expectation, and will believe it when it sees it, when it doesn't happen. And we're about ready to get rolling here with the first quarter earnings reporting period. And so next several weeks will be really important because there are other issues out there to deal with. Mainly, you have to upset in the private credit market. You still have AI disruption. You still have tariffs. And now we lump into this, even though there's a ceasefire and you've seen a dramatic pullback in oil prices today, drivers around the country are seeing pretty high gas prices. And most reports suggest that even though traffic might flow through the Strait of Hormuz over the next 2 weeks, certainly, it take months still before supplies get back to where they need to be before you see any real relief. And there's still this economic uncertainty hanging out there as well. And that kind of flows into the idea of if these earnings estimates are ultimately achievable, and if they're not, whether the market decides to see through a short-term dislocation and feels like it can get back on course here in relatively short order.
From watching a little Bloomberg television this morning, I also get a sense that a lot of military strategists think that we're leaving the Middle East turned off for a little bit and hurting potentially the United Arab Emirates, Kuwait, and others in the area that want Iran to seriously lose control of the Strait of Hormuz, as well as to be weakened so that they can't attack their infrastructure like they've been doing in the last couple of weeks. And that maybe the pause is so that we can get boots on the ground and then we're going to market lows. A lot of strategists talk. It is all over the board, but it didn't take long for the hopeful signs to turn into, no, not too fast. I don't think you have to answer that, but if you want to, you're more than welcome to.
There was something I read as well this morning, and I think it was in the Wall Street Journal, just in terms of how the market has gotten used to, as you referred to the top of the interview, Rob, the taco trade, right, where the president sounds very vitriolic and threatening, and then at the last minute kind of backs away from the most serious threat, and so then you get a nice relief rally. And the assertion in the article is that foreign leaders are figuring this out as well, and that there's potential that eventually the kind of luck runs out, and that foreign leaders don't necessarily let the president control the situation like he's been able to. And I think that's one of the risks in this current conflict is that while there's an admission that we're negotiating with a more friendly regime, I don't think that there's a clear sense yet, though, if that regime is actually the one calling the military shots in Iran. And so that remains to be seen here as to who the leadership is that we're actually dealing with and whether they have the power and authority to truly keep things level-headed here. And we're going to find out, I would imagine, over the next couple weeks. But it's the risk of this particular ceasefire here is that it doesn't last because there's other factions that have other interests, vested interest in staying in power, and we just have to see how that plays out. But to that end, I think keep a close eye still on oil prices, because I think they'll be giving us the read-through as to whether this is a ceasefire that can be sustained or something that is truly fleeting.
What do you make of the airlines today? They're obviously moving higher. To me, the story is not just the 16% drop in oil as a headline that's quite intriguing, but they instantly did the international fuel surcharges. They did the higher domestic fares. They did the bag fees. And Delta says demand hasn't dropped it, not a bit.
Yeah.
It's striking to me that this and the cruise ships are doing just fantastic today.
Right. You can draw a line certainly on a trading basis to oil prices. These transportation companies, obviously that's a huge operating cost for airlines and cruise lines. And so it's understandable because they've been dialed back here when oil price is going up. But I think it helped that Delta Airlines CEO said, that there's been no demand destruction, so to speak, in terms of summer demand, despite the higher ticket prices and higher fuel prices. That can be fortified somewhat by the fact that you still have a relatively low unemployment rate, too. But it's one of these things that I think, like I was saying, there are other issues out there, right? So we're going to get tomorrow the February personal income and spending report. It's going to have the PCE price index in that. And importantly, it is for February. So it predates the start of the Iran war. So you see higher core prices tomorrow. It's a reminder that you're going to see likely going to see even higher core prices in March when that release comes out. And that's the concern here for the market, is that the inflation factor is not being resolved, and therefore the Fed is not going to be inclined to cut rates. And so the market will also be contending with that issue as to some of the limitations of rates staying higher for longer and having to deal with inflation hanging around for longer than anyone would like to see. And again, it's one of those things. We saw some moderation in wage growth in that employment report we got last Friday. And you don't want to see a drop in real wages here because that will act as a real restraint on discretionary spending. The inflation factor is another one of those important factors that is not to be thrown out now because we might have a ceasefire here for the next few weeks.
No, as always, I try to give you a softball. You can do anything from the Federal Reserve to anything that you're working on, to things that we missed in this interview, anything that we need to know before you have to go.
Right. I think for this big picture column that I produce each Friday, it will include an earnings preview this Friday. And the thrust of that piece will simply be that we probably will see some good earnings results for the first quarter. But again, it's the guidance that with everything that's been going on here, we think the guidance might sound a little bit more conservative than people would hope. And it's just the issue of whether the market is willing to give companies a pass on sounding conservative. Likely will, provided everything stays calm for the time being in the Middle East. But if you get conservative guidance paired with a flaring up of tensions again there, then you could see some further multiple compression as we move through earnings season. So it's going to be a very interesting period, though, as we hear more out of the financial sector and the banks. So they'll be commenting also as well on the private credit market situation, as well as loan demand, which we know certainly in the housing market hasn't been so great because with this conflict, you've seen mortgage rates get elevated, and that's been a real issue for affordability and an unfortunate development through what should be the best part of the season for the housing market.
Thank you very much. As always, class act, Patrick O'Hare with briefing.com. Lots of insights. Something tells me our hit next week and the week after are going to be a little bit different than this one, as they have been all year long. It's Patrick O'Hare with briefing.com, a reliable source of domestic and international news that you can use. I'm Rob Black.
This interview featured on The Rob Black Show is brought to you by EP Wealth. Learn more at robblack.com.
So the markets are back to near highs for the day. The S&P 500's up 2.3%, 67.72. The Dow's up 2.5%, 47.77. NASDAQ's up 2.8%, 22,647. And the Russell 2000 up 3% because there's now talk about Fed interest rate cuts. Yesterday, we weren't there. Today, we're suddenly there yet again. It is insane how this market works at times. It will give you whipsaw, but I believe in capitalism. I believe this is a contained short-term event, although the damage done to the oil fields and natural gas, it's going to be worse for costs in Europe. And I don't think they're too happy with us not finishing the job or us getting involved in a fight that they didn't want in the first place. With that said, the Iranian regime isn't very kind to people, their own people. And I think we should all have some problems with that. Bitcoin's jumping to a 3-week high on the Iran ceasefire announcement. Intel is rising on news that it's going to be part of the Terafab project, and analysts just seem to love that stock right now. Everything seems to have a reason to grow up or go up at this point in time. So you're seeing cruises and airlines today rocket higher. You're seeing the Magnificent Seven move higher, except for Tesla down fractions. You're seeing the AI compute like Cipher Digital, CoreWeave, Irene, Nebius move higher. You're seeing the zero revenue nuclear companies like Oklo and Bloom Energy move 5 and 8% higher. Everything has a reason now except for energy stocks. Avis is facing a $1.1 billion in losses as car rental companies rack up 155% gains in recent rally. So Avis down 5%. Shares of the car rental company have traded violently. In the previous 11 sessions, Avis was up 155%. They're a loser today. Doesn't make a lot of sense other than the price action. Roughly half the shares were sold short as of March. S3 Partners, which tracks high-frequency measures, said that the short interest as a share of the float has recently been trimmed about 43%, down from a high of 53% at the start of the year. So it's kind of got that AMC movie theaters feel, where people believed it was going to go out of business, or GameStop. They short. And at that point in time, they've already sold, so they have to buy. Most investors, retail investors, buy low and sell high. They want to sell high and buy low, but it does bring buyers back into the market. Finding stocks with attractive yields isn't always easy. I did a report yesterday about how the S&P 500 is paying a very low dividend yield at this point in time. The Vanguard Dividend Appreciation ETF payout ratios of 80% or more are considered risky, while figures below are seen as healthy. The average payout ratio for stocks in the Vanguard Dividend Appreciation ETF is about 40%. Now, the payout ratios, obviously, when you're in the S&P 500, are going to be lower because the Magnificent Seven doesn't pay a lot of dividends. We're now seeing Micron, who's had a big run-up, hiked its dividend 30% to 15 cents. While analysts forecasting 2026 earnings of more than $56 a share, Micron's payout ratio would be under 2%. Pretty wild. I love stuff like this. I wake up for stock markets. So yesterday I talked a little bit about Goldman Sachs and saying tech is at a buying opportunity. And I want to go a little bit more into it because everyone in media, financial media, is passing this stuff around right now. The sector's endured a rough start to 2026. It's having a nice day today. The State Street Technology Select Sector XLK was down 5.7% to start the day, down 10% from its October 29 peak. Goldman Sachs gives us 7 reasons to think about buying tech stocks now. And you can do it broadly with an XLK, or you can do it with a Mag 7, or you can do it with, let's say you don't like Tesla. You can buy those other 6 and you make up your own 7th with Broadcom. So when you look at the sector's performance this year, In context of the last half century, it's off to one of the worst starts of a calendar year, going back to 1976. The global tech sector's forward-looking PEG ratio has now fallen well below the broader global markets. PEG stands for price to earnings versus growth. So the PEG ratio compares 12-month forward earnings expectations with expected earnings growth over the second 12-month period. Sector's forward PEG ratio has dropped below 1, implying it's undervalued. Third on their list for reasons to be buying or considering XLK and more exposure to tech right now is tech stocks trailing PEG ratio is also in undervalued territory. So not only the forward PEG, but also the trailing. The collapse in technology looks back PEG implies that future earnings will be much weaker and is as low as trough after the tech bubble burst in 2003 to 2005. That's pretty stunning. Fourth reason, global tech and software stocks forward 12-month PE ratios relative to the rest of the world are also at the lowest numbers not seen since at least 2019. Global tech stocks now trade virtually at their 20-year median on a valuation measure. That's the fifth reason. The sixth is, while U.S. tech, media, and telecom stocks have elevated price-to-book ratios, the return on equity is also very high, suggesting it's at a historically appropriate and on-trend level. Return on equity is something I love to look at, but it doesn't make for good radio or podcast material. Goldman said this number should quell fears about overspending on AI infrastructure. At the peak of the dot-com bubble by comparison, return on equity levels were not on par with price-to-book levels. So some ways to get exposure to tech stocks. You can go Vanguard Information Technology, ticker symbol VGT. You can go Fidelity Morgan Stanley Country Index Information Technology, ETF, FTEC. You can go iShares Global Tech, ticker symbol IXM. Those are all low cost, or if you want to go individual stocks, that's going to be up to you. And I'm not poo-pooing it. I'm just saying many people can't handle the pressure of individual stocks. The ranks of Americans that can add guac to the burrito, i.e. live large, consider first class, do it all guilt-free. The ranks of Americans that can do that, it's starting to swell. The upper middle class has become the largest income group in the United States. This is according to an AEI, American Enterprise Institute, analysis. In 2024, 31% of American families were upper middle class compared to just 10% in 1979. This report defines the upper middle class as a family of three earning $133,000 to $400,000 in 2024 dollars, 5 to 15 times the federal poverty line. There's big talk on Wall Street about how AI is going to take middle class jobs out. But as we've grown our upper middle class, we've also grown our economic inequality, with families in higher tax brackets seeing greater income growth while the poorest 5% see their earnings decline. Alibaba has launched a new data center powered by 10,000 of its own custom chips. That's bad news for Broadcom, bad news for NVIDIA. China can do what the United States does. A partnership with China Telecom powered by its own Jinwu chips. The new data center will contain 10,000 of its homegrown chips and may scale to over 100,000 over time. The data center will be used for both inferencing and training. Talking about data centers, yesterday, 13 bullets were fired at a home of an Indianapolis city councilor who recently supported the construction of a data center in his district. Backlash against the controversial buildings that power AI is growing. This is something that could undo some of the high valuations if you think it's going to catch on. Maine, the state that's known for lobster, is expected to pass legislation this spring that would place a moratorium on data centers that consume more than 20 megawatts. That would be a firm no vote on the swelling costs that come with these computing factories. Statewide bans are on the table in 9 states. Pennsylvania would make 10 if it proposes one of its own, which it's expected to. Activists in Ohio are collecting signatures to get a statewide ban on the ballot in November. 2 states, South Dakota and Wisconsin, have rejected proposed bans on new data centers. I don't know where this goes. There was a new study that talked about how data centers create a heat island within a 6-mile radius that can cause pollution and deaths. But they're also job creators. Pollution and death versus job creation. Sometimes my job isn't the most fun. Apartment rents are weakening further as war and jobs cuts weigh on demand. Apartment rents usually rise in the spring months as demand warms from the winter chill, but this year the gains are unusually small. The national median rent rose by 0.4% in March from February, $1,363. March rents were down 1.7% on an annual basis, the largest drop since apartment listing began tracking in 2017. The national median rent is now down 5.5% from its peak in 2022. That's when we were talking about inflation coming down and how housing costs come down the slowest, because when you sign a rental contract, it's usually for a year. Some of the steepest rent declines were in Austin, Texas, Phoenix, and Denver. Some of the steepest rent increases were in San Jose, San Francisco, and Chicago. Where do you want to live? Meta debuts a new AI model attempting to catch Google and OpenAI after spending billions. I own shares of Meta. They debuted its first major large language model, Muse Spark, spearheaded by Chief AI Officer Alexander Wang, who joined 9 months ago and leads Meta Superintelligence Labs. Meta is also experimenting with a new AI model revenue stream by eventually offering third-party developers access to Muse Spark's underlying technology via an API. Stakes are massive. The generative AI market is expected to grow more than 40% a year, climbing from about $22 billion in 2025 to almost $325 billion by 2033. A lot of things have to go right for that. The broader market is firmly higher, led by the NASDAQ today and the Russell 2000. Strength in Korea, they're up 9.1%. Copper miners up 7.8%. Uranium, ticker symbol URA, up 7.3%. Ireland, up 6.8%. If you want to invest in Ireland, it's EIRL. Home builders are up 5.9%. Vietnam as a country, ticker symbol VNM, up 6.2%. Semiconductors up 5.4%. Weakness is obviously in energy and oil, natural gas. Visa has unveiled an Intelligent Commerce Connect, part of the Visa Intelligent Commerce Portfolio. It's going to enable more ways for agents to pay and merchants to accept agentic transactions in a single integration. It's currently in pilot with select partners, including Mesh, Sunnyvale, Payability, Dido, AWS, Amazon Web Services, and more. For my industry, Google has just announced a new AI-powered Google Finance. The new AI-powered Google Finance is going global. They're adding in 100-plus countries to include Australia, Brazil, Canada, Indonesia, Japan, and Mexico. AI-powered research asks anything from complex questions about the market to details on individual stocks. You'll get a comprehensive AI response. New charting tools will allow you to go beyond the basic performance by toggling technical indicators like moving average envelopes and candlestick charts. There'll be a revamped news feed and expanded data for commodities and cryptocurrencies. After I play with it, I'll let you know what I think. But you can go find Google Finance by going to google.com/finance/beta. Trump is threatening tariffs of 50% on countries supplying military weapons to Iran. See, this isn't going terribly, it's going to have hitches. It's going to have problems, I think. J.D. Vance calls the Iran ceasefire a fragile truce and says Trump is impatient to make progress. On the Epstein files, Pam Bondi won't testify to the House panel. Democrats are threatening contempt. Oh. There's a lot of stuff that could still go weird, in my opinion. Barron's did a nice piece today on stocks that have a lot of potential. I always find that interesting. Some of them you know, some of them you don't know. But you're quoting Trivaret's research list. On the list is Applied Materials, Dell Technologies, Wesco, Venture Global, Allison, Transmission Holdings, Commercial Metals, Steel Dynamics, Valmont Industries, Danaher, Chubb, Toll Brothers, Thermo Fisher. I love a good list to start my research. You have to be research intensive Don't buy stocks just because you heard about it. Let's take a quick look at the market. See what the update is. Yep, it's getting a little bit hotter. The Dow's up 1,200 now, up 2.65% for the day. The S&P 500 is up 2.5%. The Nasdaq's up 3%. Russell 2000 up 3% as well. I just did a story about Meta, and I didn't do what I would have done in the 1990s. Press releases used to move stocks higher. It wasn't necessarily earnings. Meta unveiling its first AI model from costly superintelligence team. I would have thought that would have been up 10%. It's up 8%. It's pretty impressive. Stakes are high after it hired Scale AI CEO Alex Wang last year under a $14.3 billion deal. Superintelligence refers to AI machines that could outthink humans. Muse Spark is the first in a new series of models from the team and is a part of models known internally as Avocado. We'll know probably within 24 hours how the model is faring, how it does in science, math, and health. We know when Google released Gemini back at the end of 2025, stock soared. We know that when Anthropic released Claude and the reviews were so good, enterprise business rolled in and people are like, hey, I should try that. I got to start getting ready for the afternoon show. Got a little bit of a headache today. A little rain here. I don't know what it is. Bad sleep. But I have a Pints and Portfolio coming up April 18th, 11:30 to 1:30, Sunnyvale, California. It's at a brewery. I would love to see you there. You can sign up for the event at robblackshow.com. It's not this Saturday, but the following Saturday in Sunnyvale, California, 11:30 a.m. to 1:30 p.m. Sign up at robblackshow.com. That's robblackshow.com.
Join Rob Black in Sunnyvale Saturday, April 18th for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by from 11:30 to 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, April 18th in Sunnyvale. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this Sunnyvale event and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.